Greetings from Kotak Mahindra Mutual Fund. At the outset, I would like to wish you all a very healthy and wealthy 2022. Hope this year ends the misery of the pandemic and we all see normalcy soon. The government has taken an important initiative to boost the domestic manufacturing and exports. This has resulted in the manufacturing sector picking up pace over the last few years. For any manufacturing sector to thrive and prosper, it needs availability of skilled labor, rich resource repository, government support in the form of taxes and incentives, capital, logistics support, etc. India now ticks a lot of these boxes in that front, and therefore, this theme today presents a compelling opportunity for all the stakeholders. We present to you Kotak Manufacturing in India Fund. The NFO starts on 1st February and ends on 15th February 2022. This is an open-ended equity scheme following manufacturing theme which seeks to tap the opportunities provided by the domestic manufacturing businesses. India has emerged as a back office to the world in the form of providing software support. This has led to the total software exports surpass the gross oil import bill. Further, India has also been the pharmacy to the world by being the third largest manufacturer of pharmacy in terms of volume and 14th in terms of value. The value of the drugs and pharmaceuticals manufactured in India has doubled in the last 7 years. The mobile phone manufacturing output has risen 8 times in 7 years. The winning formula lies in phased manufacturing program, PLI scheme, 100% automatic FDI, tax cuts, single window clearances, electronic clusters, and import duty protection. The production linked incentive scheme, also called as PLI, has resulted into improving trade balances for some of the sectors like electronic components, white goods, solar panel, medical devices, and pharma. The Manufactured in India theme is on the cusp of a renaissance, which has started to unfold, and this might be the story of the coming decade. Thanks to new manufacturing firms that have come up in a very big way, their share in the total manufacturing has increased quite considerably. Gross fixed capital formation is a component of the economy expenditure on GDP and shows how much of the new value added in the economy is invested rather than consumed. We expect the real manufacturing GFCF to increase from 5.5% of GDP to 7% by FY27. Put in another way, in value terms, the real manufacturing GFCF is likely to double in the next 5 years. Key investment themes are China Plus One, the PLI schemes, deleverage balance sheets of corporates helping in private capex, the housing sector revival, as well as India's reimagination of its carbon footprint. The first theme we focus on is China Plus One. The answer to almost every question about China is India, said the ex-Australian Prime Minister Tony Abbott. As we all know, COVID emerged from China to the whole world, and India has given vaccines. True to a tradition of Vasudhaiva Kutumbakam, India has shared close to about 11.5 crore vaccines with about 97 countries. Over the last few years, India has imposed several anti-dumping duties against China. Further, the government of India has announced PLI benefits to boost manufacturing in India across various sectors. More importantly, the Indian rupee has become more competitive to the Chinese yuan during the last few years. PLI scheme offer incentives on incremental sales for products manufactured in India. As per some estimates, it could contribute around 0.3% of GDP in FY22. Going ahead, the scheme could attract investments of close to about 1.5 lakh crores in the next 5 years. And this is likely to lead to an addition of 1.7% of GDP and a lot of new jobs, both directly as well as indirectly. Many of these PLI schemes are already in the pipeline, And in our opinion, this will become a key differentiator in the days to come. PLI scheme is also changing India in many other ways. It is expanding our manufacturing base, attracting FDI, and helping us promote exports. Companies are sitting on cash, which is at a 2-decade high. As a result, they've been deleveraging their balance sheet. The demand has picked up with inventory to sales ratio declining. As a result, manufacturing companies have been receiving new orders. The capacity utilization is nearing pre-COVID levels, and with demand picking up, we hope that companies will start making investments soon. Currently, we are having the best housing affordability ratio, which was last seen in FY 2004. Further, with the introduction of RERA, the interest of the home buyers is protected quite well. As a result, we expect the share of real housing to increase to 8% of GDP by FY27. We can expect real housing capex to rise from close to about 10 lakh crores to about 17 lakh crores over the course of the next 5 years. The sectors related to housing, be it electrical products like wires and cables, building materials like paints, tiles, construction companies, consumer durables, home insurance and home ownership insurance, internet, and so on and so forth, are all likely to benefit from this housing boom. Manufacturing activities directly and indirectly impacts the environment. India has committed to an alternate source of energy in the form of massive investments across multiple sectors, from renewable energy to improvement in energy efficiencies. India's incremental capex has also been focused around the decarbonizing activities to try and reduce our carbon footprint. Kotak Manufacture in India Fund will look to invest in a diversified portfolio of companies based on the themes that are likely to ride the manufacturing wave. We look forward to your participation in Kotak Manufacturing in India Fund, whose NFO opens on 1st February 22 and closes on 15th February 2022. You can invest through lump sum or SIP in this fund as well. Nifty India Manufacturing Index, which is the benchmark of the fund, has been outperforming the Nifty 500 over the 5 to 10 year rolling return period. However, in the last 5 years, the benchmark index has underperformed Nifty 500 index, thereby providing an attractive opportunity to enter at these levels. The risk to this theme could be multiple variants of COVID impacting the Indian economy as well as the business sentiment, continued high commodity prices and inflation increasing the cost of capital, flip-flop in government policies which have so far been quite accommodative of manufacturing sector, as well as many geopolitical developments impacting the availability of raw materials and intermediates. Discipline of asset allocation and patience of long-term investment is the key for our investors to reduce the risk prevailing in the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.